everyone. Welcome to our weekly market analysis session. We're going to be having an analysis for week 28 of 2025. This is kind of like analysis for second week of the month of July. Last week we had non-farm payroll on Thursday. It usually doesn't happen. It doesn't happen like this all the time. It's once in a while you have non-farm payroll happening on Thursday of non-farm payroll week. It's usually supposed to be on Friday, but because of the US Independence Day on Friday, which was the 4th of July, they had to have the non-farm payroll on Thursday. So there was a little distortion in the way market is delivered or price is delivered in the market. However, regardless, we still market still did what it wants to do. Now, last week I told us that I was expecting a bearish movement in the dollar. As at last week when we did the analysis, this was the candle we saw. This had not printed this little hammer, bearish hammer. So I don't really take note of candlestick names, but I think it's like a hammer or so. So this particular candle has not printed as at when we did the analysis. What we had was this one. So I told us that I was expecting a downward movement. I didn't particularly tell you how far it was going to go, but I told us we're going to see a downward movement. We saw that, and from what has happened so far, looking at the weekly time frame, we're inside of this volume imbalance, and I told us that it's going to have significant impact in the price action as it were. Lows have been swept significantly into bullish order block, and we have a volume imbalance here. Some feeds might not have this, so if yours is not having this, don't worry about that. Some brokers, you have an order an FVG here, but in this particular broker, we're having it as volume imbalance. But we have the bullish order block here. I think all brokers have this as the bullish order block is here. And if you measure the swing low to the swing high, this is the parent price swing. This is the dealing range from the low here in 2021, 2021 January to 2022 September. We have that's the dealing range. So we've essentially traded into deep discounts, and this for me it's a very strong support zone. I want to see a rally from here. Now, this is what I'm looking at. I don't want to see this low violated. Like I don't want to see price maybe it opens Monday and then it trades below to close below this low. I don't want to see that happening. So this should be intermediate term low for now. I want to see something like we have a short term low here. I want to see another low formed here that will not be lower than this, and then an upward movement to, that's what I'm looking at. So this low should be like the low for the first half for the second half of the year. Okay, so this will be the low for the second half of the year going forward. That's what I'm looking at. So if this low is not violated, then we'll be thinking of upside objective. Now, if the low is violated, we're going to take out down, it's going to trade below this low, and then we're going to see if this bullish order block here will find some form of support. But for now, this is the low I don't want to see violated. Okay, once this low is violated, then we'll start looking at the sell side liquidity resting below this low here, and then this other block here, we'll see if the market will have some form of support around this level. But for now, we are within this area here. So I want to see this low stay unviolated. That is what I am looking at. Okay. Daily time frame. We have pool of liquidity resting above this equal highs here. On some platforms, this particular candle, this particular day on the 23rd of June, it was like an equal high with this one. I think some brokers even swept above this high, but just by a little. If you check TradingView, you see dollar index on TradingView. I think it went up to this point. So there is a pool of liquidity resting above these highs here. Now, if this low stays unviolated and it's, in my opinion, becomes the low of the second half of the year, then we're going to see the first point of call, liquidity swept above these highs. All right, that will mean that this series of down close candles, 1, 2, 3, 4, 5, 6, 7 of them would act as bullish order block, okay, like a weekly order block, all right, something like that. Let's go to weekly time frame. So this would act as bullish order block, okay. That's what I'm looking at. So if it goes to the upside, this will be bullish order block. So we want to see it sweep this liquidity above here. Once it does that, I'll look at the price structure at that time to know if I'm going to go higher. And the next point of call will be this, and then we'll have another equal highs here, and then this FVG. Okay, so that's what I'm looking at. But once this low is violated, then and the body closes, not just trading below it, but the body closing below this low, then we're going to go to the other discount array I showed us earlier. All right, so that's about that. We have the price and liquidity rest here. That's the equal highs on the daily time frame I showed us. So that's where I want to see price get to once if this low stays unviolated. So I want to see price on daily week 4 hours. We can see that this high has been broken to the upside. It came, retested, broke again. We are inside this FVG. So I want to see it consolidate here. It could sweep this low, but it should stay within this range, low to this high, and then go higher to attack the buy side liquidity resting above these equal highs that I just outlined. So that's it for the dollar index. Let's go to the next, Euro USD. So Euro USD weekly time frame, we have the FVG here. Can you see the FVG here? This is the FVG I'm looking at. Okay, price has traded into it. You can see here it respected and then closed below the 50% of the FVG. Now I want to see if you go to lower time frame, what's there's okay. Let's do that quickly. It has traded to this area. Now, if you check, if you have the bearish order block inside, like a breaker, we have this low, high, this low, higher high. It has broken into the downside. So it's inside this breaker essentially. Okay, we have bearish order block as well, and price has traded to it, respecting the 50% of it. Now I want to see it, consolidate here. It shouldn't trade above this high as well to close above it. It could be weak through it as it the wick of the candle can go above it, but it shouldn't close above it. Let's go to daily time frame. On daily time frame, we have the Friday, Thursday, non-farm payroll. We have Wednesday, Tuesday, okay, and then we have the Monday. Monday was 31st, 30th of June. Then we had 1st of July, Tuesday, creating the high of the week. So I want to see that Tuesday as like the high. But if you check 4 hours time frame, we're seeing equal highs here. If dollar shows its bullishness, okay, and we have up close candles, premium arrays being violated, and then discount arrays finding support, then this might be left the way it is and will just roll down. And I think that might be the case. But personally, I don't like this type of highs. Okay, I don't like this type of highs. So it still it still likely depends on what the dollar index is going to do. So if we're extremely bullish on the dollar index, then we're going to roll over and then attack this low here, ultimately get to these equal lows here. Okay, so that's what I'm looking at. I want to see how we trade around this. If these equal highs here is equal highs here, if they are left this way, all right, it means that okay, we have Smart money reversal. We have the low risk sell. It came back, tested it again, and it broke. So like kind of a distribution here, and then go down, redistribution, and something like a market maker sell model. That's what I'm looking at. So we could leave this, and then roll over. Preferably I want to see that happen. I want to see leave this equal highs and then it just goes lower, attacking these lows, and then not finding any form of support here, breaks down to take out these equal lows here. That's what I want to see. Okay, that's for Euro USD. GBP USD weekly time frame. This line here is the opening price of the monthly time frame. The bullish order block on the monthly time frame. So this series of up close candles, that's the bullish order, bearish order block. So opening price, that's why I anchor this red line here. It has touched it twice, and uh, this is where we are. We had a rejection. Last week took our previous week's high, and then we traded soft. We traded bearishly. I want to see it maintain this momentum and go lower. We have excess liquidity resting below these equal lows here, and then this one here, and also it's been bullish. I want to see reversal for bearish movements. Daily time frame, we have Tuesday as well, creating the high of the week. This is Wednesday, Thursday, Friday. We can see how we bumped into the FVG. Let me expand it so we can see institutional order flow entry drill traded into it. I want to see push lower, take out this low, and then this CB shouldn't act as support, should break below it, and then we should act as inversion FVG to take out this low here. That's what I'm looking at. Day week 4 hours time frame. As long as this FVG acts as strong resistance, this will be considered a breakaway gap. Okay, on 4 hours time frame, we could trade back into this area and then go lower. On 1 hour time frame, we can see the bearish order block here. So any movement to the upside, we could sweep these equal highs, relatively equal, and then trade to this bearish order block inside this breaker and then go lower. That is permissible. Okay, that is permissible. That is permissible, but to trade all the way to this point, no, it means that we're going to go higher again. So as long as this bearish order block holds price as resistance level there, then we're going to go lower to our discounts arrays. Okay, that's for GBP USD. AUD USD, we have essentially traded into a bearish order block on some brokers. This two candles here, in fact this particular one here is a bearish order block. If you look at it here, for this particular broker, you have the low here on this bearish candle. It opened, rallied up a little, and then went low and then closed there. So this is the closing price. Now see what happened. What is showing us here is that it gapped up, opened here, and then went as high as this, filling in this imbalance. I traded to the breaker, and then it traded down again, taking out this low, and then closed here. But if you check some other brokers, it actually opened here, went lower, traded higher, and then closed. So it's a bullish candle for some brokers. That's what this should actually be. But based on that, based on what the price action here is also considered as a bearish order block. So it actually has traded there multiple times, and then finally we respected the mean threshold and then we broke lower. Okay, so I want to see this also as an intermediate high to go lower. On daily time frame, that same area we have, can you see the bearish order block on daily time frame? So it's more pronounced on daily time frame. Measure at 50%, it didn't even get there, and that is, for me, it's better. So it means that it's heavy to the downside. So I want to see giveaway. We have a lot of self liquidity pool resting below. So I want to see a flush down. I want to see a flush down for AUD USD. That's what I want to see. NZD, we have this weekly, this FBG on monthly time frame, the CB here. The first month we had June, we had respected it in June. July had taken out previous month's high, and then we've traded lower. So I want to see it go lower like this. So this should be the high of the month to go lower. The FVG has been completely filled on monthly time frame, so that should, I want to see just keep going lower. Weekly time frame, multiple times to go above. It didn't finally, it swept like Judas swing for the second half of the year. So I want to see this go erode lower. We have a lot of sets and liquidity pool resting below this low, this one, and then we'll see if it has potential to go lower than that. So that's what I am looking at. Tuesday creating the high of the week. I want to see it go lower. This FVG should act as inversion FVG to go lower. Let me set side liquidity on daily time frame. Let's go to USD CAD. So USD CAD multiple times inside this FVG that's traded inside there multiple times from this particular candle. 1, 2, 3, 4, 5, 6, 7, 7 weeks, almost 2 months inside this FVG. Okay, and it had failed to close below. It kept poking its head below it in terms of its week. We can see the bulk of the volume rested inside the FVG. Now, looking at it structurally, it's easy for it to actually take out these lows. But if it takes out this low, where is it going to? It means it's going to really tank, because there's no other inefficiency apart from the lows, previous months, previous weeks lows, this low here, this low here, this low here. That's basically what it is. No other inefficiency on weekly time frame, even on monthly, until this area here, and that would be really really bearish for this pair. I don't see that happening because the first currency on this pair is the dollar. So if the dollar reverses to a bullish movement, then it means that it's going to push this thing higher. Monthly time frame, you can see the FVG here about 3 months entered here, 1, 2, 3. This is a third month. Now I want to see a giveaway, and then this particular bearish candle should turn to bullish candle and go higher. Then see trade into this area here. There's an area of inefficiency here. So that's what I want to see. Now, obviously, if we're going to trade this as in isolation, all right, without looking at what dollar index does, it's safe to say that it's going to go lower than to take out these lows, okay, because it has had several attempts to break lower, or rather that's we can see that this is like a balanced price range. So any movements to the downside is going to really really go bearish. But because dollar has gotten to its points where we feel we're going to see significant bounce on a reversal point, it's going to make this also go higher. Daily time frame, it could sweep this low. It could do that because I traded to rejection block on Thursday, so it could sweep this low and still be bullish. It could still do that. It could do that. So I'm not like leaving this as the low of the intermediate low. So it could sweep this low and still go higher. That's for that basically. We have buy side liquidity pool then resting here, equal highs here, FVG here. So let's see how we trade around that. For USD CHF. Now, this particular line I drew here is from the monthly time frame. That's the rejection block on monthly time frame. Okay, we fell short of it last week. We didn't get to it. We can still do that. We can still do that this week. Let's see a daily time frame. No structure has been broken to the upside yet, but if you check 4 hours, I think we have broken structure to the upside on 4 hours, except it gives way. Okay, if this low gives way, then it's going to take out this low and then trade to the rejection block. Okay, so because of the rejection block, I think I might give room for any manipulation to the downside. I might give room for that. Okay, once it has traded to rejection block, then I'm convinced that I might go ahead. But if dollar keeps, if the dollar starts moving aggressively to the upside, you might leave this and then go higher to attack buy side liquidity. We have a lot of buy side liquidity resting, like we have on weekly time frame these equal highs here. Liquidity is, we have pull on liquidity resting and we have inefficiency as well. That's actually my target. It could happen before the end of this year or maybe next year, but that's actually my target. All right, that's my target. So if it breaks above this particular candle's high, then we'll consider this as an order block, bullish order block to go higher to clear the buy side liquidity. So it's going to be a long-term position trading, all right, for this pair. That's for that. USD JPY. So USD JPY, if we're trading this in isolation as well, we have pool of liquidity resting below these lows. This low here and this low, they're relatively combo. Though this is lower than this, the low of this candle is around 140.25. All right, and the low of this candle here is 139. So it went below this low. The low of this candle here is 139 as well. Let's see which as it's something. Okay, this is the low. This is lower than this. So you can see this is a low, lower low, a higher low. So it would be that we want to start reversing from, which is also ID, but they are relatively equal. And if it breaks below this low, this is the only area of inefficiency I'm seeing here on weekly time frame. So as because the dollar is the first currency, the base currency on this pair, the dollar starts to go bullishly, we'll resume a bullish movement for this pair as well. Daily time frame, we failed to go below this low, only traded to the rejection block, and then we broke structure, consolidated. I want to see an impulsive movement to the upside. 4 hours time frame, I think we've broken structure to the house. Yes, so 4 hours time frame, we've broken structure to the upside. I want to see this FVG act as support to send price higher, to attack this higher and this higher. Then let's see upward movement for this pair. It's been really sloppy, up down, no directional bias for a very long time. So if dollar starts to go bullishly, then it's going to give room for this to expand to the upside. Our indices, finally, we've seen, I told us last week that we'll still push up higher. The reason is because the US 30 has not created its all-time high, so like a 6-6 star approach, and we saw that happened. US 500 went higher again last week. US 100, same thing, we pushed higher, but US 30 has not taken out its high. We have relatively equal high, so we want to see another push higher. Now it has created FVG, okay, so it could trade inside the FVG, which is permissible. Also, the three indices created FVG. We have FVG here on US 100, we have FVG here on US 500, US 30 also created FVG here. So if we see any downside movement is allowed, we could, that's like trading into the FVG to send price higher, okay? So that's allowed, all right? But you could just keep going higher from here. Of course, we know that ultimately we want to take out the buy side liquidity resting above this high here. So that's for, so we're still bullish. Any downside objective is the FVG here, the BC that they created 2 weeks ago. That's where we might trade to and then send price higher. Now, lastly, we have the gold pair. The gold. We've been consolidating here for a very long time. We're consolidating here. Now, this particular line here I drew is, I don't want to see is a consequent encroachment of the monthly wick. All right, I don't want to see it traded to the upside, like the body closing above this line. As long as we stay below this line, then the bearish movement for this is imminent, because it's opposite to the dollar. So if we expect a bullish movement for the dollar, then this asset should go lower, should tank. All right. Looking at it structurally, we traded higher. This was the all-time high it created. This went to the rejection block, went lower, it tried to go higher, it took out this high here, but failed to take out this high. So, and again went traded over the rejection block again. Then that means we took out the liquidity resting here, and then we broken structure to the downside. So we want to see it give way, go lower. This low and this low are relatively equal. We want to see movement to downside targeting this area here. So if it starts to break lower, our focus should be around this area, this FVG we have inside this other block, this bullish other block. So that's what I'm looking at. We have sell-side liquidity resting here. As long as we don't trade above this line, a weekly time frame, as long as we don't trade and close above it, then I'll be looking at bearish movement for the for gold. So we've broken structure on daily time frame. 4 hours we also broken structure to the downside. This is trading into FVG. You can see how it respected the FVG. This is the FVG I'm talking about. See how we respected it. It wouldn't even close above the 50%. So we want to see it go lower. This movement up should respect the bearish order block on the send price lower, attacking the buy side, sell side liquidity resting below this low. Okay, we have this low and this low that are relatively equal. So we have pull of liquidity resting here. So if it's going below this low, we have this FVG here. So let's see if this week price trades to this level. So gold traders, once if this is what we're going to do. So gold traders, if the bearish order block is respected, and then we start to go lower, we break below this low, your eyes should target here. All right, we have this low and this low that are relatively equal. So if it starts to go lower, this is what we are looking at. So we're something like if it trace back to this place and then starts to go lower around uh, over 1000 pips. Okay, want to see gold give way and then trade lower. If you divide it by 10, that's over 100 pips. Trade lower to this area of inefficiency on 4 hours time frame. That's what I'm looking at for gold. Now, Bitcoin, I checked the chart for Bitcoin. What I saw on the chart is still a bullish structure. We are still bullish on Bitcoin. All right. I told us that we're going to still go higher to create another all-time high. That's still my bias for Bitcoin. I've not changed any bias for Bitcoin. We're still bullish on Bitcoin. So, in summary, we're expecting a bearish dollar. That low that we created on Tuesday should act as the low, the intermediate low for now. All right. Same goes to Euro USD, GBP USD, AUD USD, NZ USD. We expect bearish movement for those pairs. And the areas that I've marked out for sell side liquidity. Then USD CAD, USD CHF, and USD JPY, we expect bullish movement because dollar goes bullish, then they're going to follow dollar in sympathy movements to go higher as well. Then our indices, we are still bullish long term, but it could retrace into the FVG created 2 weeks ago, right? So that's the framework for our indices. So if we see any movement to the downside, let's target the FVG that was created last 2 weeks. Then gold, as long as gold stays below this bearish order block here, and this is our next level of liquidity. That's our next target will be this FVG here. So that's our analysis for week 28. I thank you for always supporting me, for listening to my analysis every week. I am encouraging you to stick to your plans. Don't trade impulsively. Stick to your trading strategy and your trading system. I wish you all the best, and I'll see you guys next weekend.